Virgin Galactic announced fourth quarter 2023 earnings after the market closed on Tuesday, and there weren't a lot of surprises for the fourth quarter of 2023. This is a company we're not really focused on looking at how much revenue or what the gross margin is for the company. You're really starting to think about when are they going to get the Delta class spacecraft done? What are the economics going to look like? And are they going to have enough cash to get to that point? So we got a little bit more detail around that build out and some of the economics. In particular, they said that they're raising their prices from $450,000 per ticket to $600,000 per ticket. So the margin you're going to generate per flight, there's going to be 6 people on each flight, just went up by almost $1 million, $900,000. So that's really exciting if they do ever get to the point where they're flying 300 to 400 times per year, which is what they're projecting. So I was down and met with management, saw the facility in New Mexico in January, and talked a lot about the things that they talked about on this conference call. And I think one of the things that management really tried to do was lay out what happens beyond building 2 Delta class spacecraft, which they have enough money to do on the balance sheet. That's what management is projecting, to building 3, 4, potentially 5 for New Mexico, and then expanding into more hospitality, expanding into more spaceports around the world. So that was part of the conversation now. So I think that was encouraging. We'll see if there's any sort of stock reaction, but if you're looking at this company as a long-term investment, if they can get to the point where they're operating 2, 3, 4 spaceports, now you're talking about this being a much, much larger company than it is today. So I want to dig through some of the numbers and give maybe some context to some of the conversation that happened on the conference call. And if you have any questions or comments, leave those in the comment section below. I'll try to get to everything. My name's Travis Hoium. Thanks for watching Asymmetric Investing. Please subscribe here on YouTube for all my content. And thanks to this video's sponsor, The Motley Fool. If you go to fool.com/ASYM, they'll give you their top 10 stocks to buy right now. So let's start with the release. And there's just a couple of things I want to touch on here. The big things here on the earnings release, $982 million in cash on the balance sheet. This is what you're going to really want to keep an eye on over the next couple of years, because there's not going to be much revenue coming in for Virgin Galactic until probably the middle of 2026, when commercial operations will start. And then the next thing you want to look at is operating expenses and cash flow. So operating expenses, $117 million. That was down from $154 million a year ago. So those numbers are starting to come down. I'll get to a little bit more detail there. And then cash used from operating activities, $95 million compared to $131 million a year ago. Offsetting that a little bit was capital expenditures, was $18 million. And this is what's going to pick up this year in 2024, is they're going to be actually building a lot of the components that are going to become the Delta spacecraft, building a lot of the components that they're actually going to, what's called static tests, basically break those. And so you basically have to build all of the plane parts, and then you're going to test those to see if they break at the point that you expect them to break. This is pretty typical with aircraft testing. But when you're only building a few of these, it's a very expensive process. So this is the kind of thing that's going to go on, a lot of capital expenditures, and then expenditures into this testing phase. They do expect to have another flight in 2024. I believe that will probably happen in June. And then their factory is expected to open middle of this year. The construction is coming along on that. So it seems like they're kind of putting the finishing touches on that. I've seen some pictures and the structure is in place. It's just going to be a matter of doing a couple months worth of finishing work. The couple of things that I wanted to highlight from the income statement, they talked on the last conference call about how they were going to cut a lot of the spaceline operations. Basically, all the operations are going to go away for the next 2 years because they're just focusing on building out Delta. They're not going to be flying Unity, which is the current spacecraft, because it's basically just burning money. So you don't need to do that. So this $24.3 million in operating expenses for the fourth quarter of 2023, after this next space flight, is probably going to go down to about where we had it in 2022. So a little over $1 million. You have to have a little bit of operation expense for particularly the spaceport, but not going to be a lot of money spent there. R&D expenses, what they're doing is really shifting from R&D to capital expenditures. So think about the engineers that are working on building out Delta. Your time is going to be allocated either to research and development or to capital expenditures, and that's going to sort of shift in one direction for a little while, and then it'll shift back to R&D as some of these capital expenditures are completed. Selling, general, administrative, this is where you want to see a lot of the cuts being made, because this is just overhead right now. You want to be focused on engineering and actually production work. So that's how you get the drop in operating expenses, but expect this to come down even further. You just pull out these spaceline operations and some of these special charges, you get to about $80 million pretty quickly, and then that leaves you a little bit of leeway for the money that's going to be spent on capital expenditures. Thanks to our friends at The Motley Fool for sponsoring this video. Visit fool.com/ASYM for the top 10 stocks to buy right now. And this is the presentation. This is Galactic 6. So this is the spaceport and the crew of 4 here that was flying. And this was just an interview session that happened after they got off of the spacecraft. And one of the things to note here, this is where I was there for the experience, and there was a lot of people there, and I think they talked about that a lot more on this conference call, that eventually this is going to be a ticketed experience. It's going to be something that you're going to be able to invite extended people beyond just the 3 or 4 people that are directly in your family, who are kind of a little bit more intimately involved in your spaceflight experience. So this is a pretty big crowd, and the crowd is going to get a little bit bigger on a kind of day-to-day basis if they get to 4 to 5 spacecrafts flying and doing 300 to 400 flights per year. This is going to be a pretty busy location. So they were trying to showcase that a little bit, and I think that was one of the points of feedback that a lot of the analysts gave, is what is the revenue stream beyond just the ticket price? And this is a pretty natural one. The scaling of the business is something, this is again something that we talked a lot about in New Mexico, and they really highlighted, because I think what they're focused on right now is building those first 2 Delta spacecraft, but they did need to communicate that, hey, we are thinking about 3 and 4, because that wasn't clear just a few months ago. So they are talking about this 4 to 5 Delta class spaceships, and what you would have is 4 would be the number that would be operating on a regular basis, and then you would basically just have 1 backup, but that would get you to 300 to 400 flights per year. Just do some quick math, and a $600,000 ticket price gets you to $1.1 billion just at 300 flights per year. 400, you get to $1.44 billion per year. So if they do get to this point where they're flying 300 to 400 times a year, almost on a daily basis, this is going to be a much bigger, much more successful company than it is today. The problem is getting there, and we'll get to some of those things in just a second. They did show some of the exoskeleton and interior. This is something that Mike Moses talked a lot about on the conference call. Very similar conversation to what I had with him in person, just talking about where they're taking weight out of the spacecraft, where you have panels where you can go in and check components. This area right here was something he talked specifically about, because this is where the wing is bending when you're coming down on re-entry and you become a glider. And there's components in there that when they built Unity by hand, they ended up having to add supports or add some wiring in certain places. And so you have to kind of disassemble pieces of the spacecraft. Well, now you know what needs to be tested. You can just put a panel there and put your testing equipment on and be done much quicker. So the turnaround is a number of hours now. They talked about a day turnaround of inspection on the conference call. What I heard from some of their maintenance people is it's really more like 3 or 4 hours is what they need to do a lot of this testing. Now, they're still only saying that they're going to fly each spacecraft twice a week, but that turnaround is much, much quicker than it was for the Unity spacecraft. That's pretty clear. This is their facility in Phoenix. This is where they're going to assemble their vehicles. This would be for the spacecraft, and then this is for the mothership as well. That will be coming later on. And you can see some of these pictures of the interior. You can see just finishing out the build out, but the structure is largely in place. They also give a little bit of an idea of the tooling that's going on. This is at their contract manufacturers, but just gave investors a little bit of an idea of what's being built. And you can see the internals here of the rocket. This portion right up here is actually where the people are sitting, and then all of this component, and then all of these components are related to the rocket. So this is what's actually making things go. And then you have just a whole bunch of sensors that go on in the spacecraft. And that's the kind of information that's being fed back, not only during the flight, but also after the flight, to make sure that the spacecraft is being tested and safe to fly again. Here's some of the reconciliation of non-GAAP numbers. And then you're looking at the operating cash flow, negative cash flow, $95.3 million. That's an improvement of a little less than $40 million from a year ago. So that's the kind of progress that you need to see if Virgin Galactic is going to survive the next 2.5 years. That cash burn has to be as minimal as possible. You are spending more money on capital expenditures, and this is to be expected. They are going to build 2 Delta class spacecraft. That's $50 to $60 million a piece. Plus, you have to build out their assembly facility in Phoenix. You have to build the spacecraft that you're going to effectively break, or the components that you're going to break. So this is going to be an expensive process, and a lot of this spending is going to happen in 2024. So keep that in mind, that the cash burn is going to probably be higher in 2024 than it is in 2025 when they move to more of a testing phase. So what I took away from this conference call and from the earnings report was steady progress on the cash front, cutting costs in the ways that they need to, and moving towards that development phase of the Delta class spacecraft. We're going to get more updates throughout this year on how that's going and the pace of those developments. My understanding is that most of the testing is going to go on in 2025, but that'll probably happen starting early next year. The two things that I took away from this was really the price increase. So $600,000, that makes the upside significantly higher for Virgin Galactic just with those 2 spacecraft. So that's how you get to free cash flow positive. If you're charging that much money, you don't have to fly a lot of times per year to cover $100 million per quarter in operating expenses. And then also starting to talk about what those future spaceports might look like, what the experiences might look like. They do have land right near their New Mexico facility where they could build things like hotels, restaurants, have some of those experience centers. So those 100 or 200 people that are going to be there for each flight, for watching the people that they're seeing, or maybe even just guests who want to see the experience, could go stay at that hotel for a couple of days. Could be another ancillary revenue source for Virgin Galactic. So it started to open up that conversation with investors, but I think what they're really trying to do is lay the groundwork for, hey, if we get to the point where we actually launch these spacecraft in 2026 and we get over this, are you going to survive question? Now we're starting to talk about what's the upside. And that's what I think investors at least need to start thinking about, is what is the upside for this company? If you're doing $1.1 to $1.4 billion worth of revenue just on space flights, and your contribution margin, or the cash flow that's coming from that, is probably in excess of $1 billion, you're suddenly a really, really profitable company. That may not be until 2027, 2028, but it's within sight. And management even said that 2029 is probably when you would start thinking about the second spaceport. CEO Michael Koglaser said that this was a 5-year process. It seems like that process is in the works, and they definitely have not announced anything, but I just get the feeling that somewhere in Europe is probably going to be where they're going to land for that second spaceport. May have to do with the fact that the Italian Air Force was one of the first people to fly Virgin Galactic commercial space flights. Keep that in mind if there's an announcement in the future. I think there may be a tie there. But overall, taking steps in the right direction. Now the question is going to be, what does this cash situation start to look like a year from now or 18 months from now? Are they able to raise a little bit of capital? Is it on onerous terms? Can they raise debt? A lot of questions from a funding standpoint. And unfortunately, in a lot of ways, Virgin Galactic, we're in just kind of a waiting game from an investment perspective. So definitely a good company to keep an eye on. I think the upside, the asymmetric potential for this stock just got a lot bigger because ticket prices is going up, and now they're starting to talk about building 4 or 5 spacecraft for the Spaceport America and actually adding more spaceports throughout the world, maybe even by the end of this decade. So generally a positive day. Didn't seem like the market reaction after hours was all that positive, but stock's kind of bumping along where it's been for a couple of months now. Well, let me know if you have any questions that hopefully I can answer, give some context to. Love to hear your thoughts about Virgin Galactic's earnings report and the conference call. Those calls are going to be really telling over the next few quarters. So leave those comments in the comment section below. Don't forget to subscribe to Asymmetric Investing. Thanks for watching, everybody. See you next time.